Welcome. We call this series that we do on a regular basis Decision Risk Identified. It's where we quantify the gap between strategy, execution, and EBITDA, revenue, profit. I think those three things are they're kind of causally tied to each other. And that's what this whole series is about, is how they're tied to each other, and how it manifests and how it shows up. My name is Vinay Raman. I've been in artificial intelligence, machine learning, data science, business intelligence for 25 years. So I've seen a lot of these things happening. And this series today, and this particular episode's title, is When Revenue Conversations Stay Confident, but the certainty drops. Gosh, I feel like there's a lot of stories around that. So just a little bit about me. So I've been studying data and data science and these things that tie things together. Business intelligence dashboard, worked for Department of Defense and high stakes military operations, and the founder of multiple companies. I've experienced that growth and scale isn't always just about intelligence. It's a lot about perspective and how things are breaking down and what the leadership structures put in place. And today I'm doing this with Jeff Miller. Jeff, how are you doing today?
Doing well, Vinay. Thanks for having me. And I'm excited to talk to you about it. I mean, I think my perspective is more from the operator. You know, I've run a business for quite a long time, and now I do fractional CRO work along with M&A advisory. So I obviously know what buyers are looking for too, and how they're valuing companies, and the importance of particularly making your pipeline believable, right? It's tricky, but I think if you've got a process in place, and you guys obviously are, because alignment doesn't necessarily mean agreement, right? So I think the companies need to figure out how to make that, get on the same page as far as the agreement and how they're actually evaluating these deals. So happy to dig in on this with you.
Yeah. So just to give you a quick background, a little more about Jeff. He's the Director of Business Development at Stony Hill Advisors, specializing in guiding those B2B companies through strategic growth initiatives and mergers and acquisition advisory, as he mentioned. Many years in executive roles, building those transparent sales pipelines. A lot of what you were talking about, the process, refining the business strategies. Because it's all about scale, it's all about repeatable revenue growth and finding that flywheel that we can keep cranking. But hopefully it takes a lot less energy to crank and puts out more, right? That's the goal. So highly encourage you to connect with Jeff at the end of this. Happy to make an introduction. But today, what I want to focus in, and this is kind of where I would love some stories from Jeff as we go through this and with the rest of you. I'm going to show you kind of a little bit about where this fracturing happens in the company. And that fracturing specifically focused on what this title is today, where revenue conversations stay confident, but the certainty drops. Let me kind of jump right into it. I'm going to show you a slide. I want you to take a quick moment to just look at this. This is a diagnostic that we run on leaders and leadership teams and various teams. This works in private equity. It works for individual privately held companies. It works at all levels of the hierarchy. Do you see, Dan, I'd love to hear what you're thinking, or Sayre, I would love to hear what you're thinking. Just kind of looking at this person here. This is how they responded. When you see something like market growth, this person shows a lot of confidence. They put a 10 out of 10 on that particular dimension. But you can see something like financial health, and they put a 1 out of 10. Dan? I'm kind of curious. What are you seeing when you see this? What is sort of the narrative that goes through your head?
Well, we always want to avoid problems, so look at the gaps, right? So, it looks like team communications and quality assurance, market strength. Those are, or is it financial health?
Yeah, financial health, yeah.
So, those are the blind spots, right? Those are the sore spots that need to be solved for, right?
Yeah, Sayre, how about yourself? When you look at this might be the first time you've seen this. What kind of comes to mind? What do you see when you're looking at this?
Well, what I immediately think of is um, what is the gap between the executive's narrative of what that future looks like and the actual reality that the middle managers are facing to try to make that happen. And what also comes to mind is the every layer of an organization's hierarchy has a different conversation, different language, different metrics. And so even with this thorough look at where we aligned, where we not aligned, I'm wondering if there isn't further breakdown behind that, because the language the executives are using is very different than senior level directors and middle managers. So it's more of a hot mess than I think we'd like to admit.
Jeff, tell me a story and what you're thinking. I mean, you've seen this graph before. I mean, how does this relate to, let's just talk about that general umbrella of sales. When you see something like this, what's going through your mind?
Yeah, first of all, I'd love to talk to this person. It's interesting how he could have, or she could have market strategy, market growth strategy, customer loyalty, brand strength, all is really high marks, and perceives themselves as being strong in those areas, yet it doesn't look to have any ability to execute. Financial health, process efficiency, quality assurance, team communication. I mean, they're all very low. So I'm not sure how he could be, or she could be, so rosy on those particular areas, yet very low on the others. So it would be a very interesting conversation.
Yeah. And Jeff, in the work that you've done, do you feel like you've ever met an individual or a leader who may have kind of fit this profile to some degree?
Oh yeah, certainly. I mean, it almost looks like this person is an optimist. And there's plenty of optimistic business leaders out there that don't necessarily live in reality.
That's for sure.
Yes, for sure. I mean, and I think we've all been guilty of it on occasion, right? It was running our own businesses that, luckily I've had some good mentors, and I've been a part of some great professional organizations, and to kind of help you get reality checks and question, your assumptions. And I think that's a good thing for all CEOs and leaders to do. And the core assessment obviously is a great way to check your assumptions, based upon how your team sees it, and being aligned, moving forward.
Yeah, for those unfamiliar, there's a diagnostic tool. I'm going to show you a little bit more about this a little bit, but this is what is the output of that, right? It's starting to, as you can see here, and Sarah, I think you made a point of this. You can start to see a little bit of what this person is thinking and how they're seeing the view, that sort of their underlying operating assumptions, if you will. But you can kind of see how this might already lead to kind of give you some indication as to foreshadowing, as they taught me in 9th grade English. The foreshadowing of where the fractures might be occurring in this organization. I want to move to this next slide here, because I want to talk to a little bit more about sort of the process of how that fracturing occurs. We call that the C cycle. Strategy that leads to execution, that leads to EBITDA. And again, Sarah, I think you mentioned this almost, right? What people hold in their heads as a leader may not necessarily have high integrity in terms of how it translates into execution, how people want to act on that, which means your chance of getting to that revenue, to the EBITDA, to the profitability drops pretty significantly. A lot of people call this alignment, strategy and execution, but alignment is just a goal that you write and put up on a wall and say, hey, this is what we're doing this quarter. That translation.
Can I speak to alignment for just a quick moment?
Please do.
I worked for a very large multinational medical device company based here in the Twin Cities, who shall remain nameless, and you'll understand why in just a moment. But worked on a lot of change management projects for them, and under the umbrella of an effort called operational excellence. That was the theme for that year. And alignment was one of the values, and it was used so many times, I really wanted to ask, so if you use the word alignment 3 times in one sentence, does that mean we're more aligned than if you just use it once? And I make that point not to be smart about it, but to say, that is a great example of how these corporate jargon, generic words that we use to look at this cycle, C cycle, and we're aligned. What the heck does that mean? In lockstep, afraid to ask a question, get along to go along. Languaging is incredibly important, and as we know, language is different at every level of the organization. So my curiosity about the previous slide is, what lens did that person have based on their position in the organization and an experience to create such a odd evaluation of high levels of alignment or accomplishment in some areas and negligible in others?
Yeah, Jeff, I appreciate that, Sarah. And Jeff, give me a moment here. I want to put some language around that because I want to kind of get your thoughts on this, right? I think I'm going to put some language to what you just said, Sarah. And it's that the problem is that we all interpret based on our own individual operating assumptions, right? We saw one individual and how they're seeing what might be a kind of a really funny or odd look at what they're seeing in the organization. And you just saw them. But we can have alignment, but have different people on the same team or throughout the organization who see in an aligned way through their own interpretation, completely different pictures. Jeff?
Yeah. Yeah. Like I said a minute ago, alignment isn't agreement. People can agree on revenue goals, EBITDA targets, strategy, but it's misaligned on why deals are moving and why deals are not moving and what customers actually want, and whether operations can profitably deliver that. Yep. Or what the forecast really means, or and just really where the risk is hiding.
Yeah.
Right.
So something I'd like to say here sort of as a sequence, right? If we all interpret differently, we act differently. If we act differently, we arrive at different endpoints. That's execution breaking, right? So, and along with that is the EBITDA, the revenue, the profit. There's lots of rework because, oh wait, I didn't know that that's what you thought, right? That shouldn't be happening. I think that's what I'm hearing. And Clayton, I see that you've joined us. Thanks for jumping into the call. Let me show you a little more of kind of how it should work, right? Some of the stuff that should be happening in the background and how we get that integrity across that process, what I call measuring certainty across the strategy to execution lifecycle. We need to have that interpretation audit, right? Between that strategy and execution, is that risk being identified? Because we say, hey, we're going on vacation. I go to my family to the dinner today. My wife thinks we're going to Kenya on safari for a month. I'm thinking we're driving in the family minivan, the National Lampoon's Vacation in the back of a station wagon together, and all my kids are thinking something completely different. There's risk already being interpretation because of that interpretation. And we need to put guardrails around that. How do we capture that value? So all of us saying, hey, no, I suggest that we're going to Disneyland together in the family truckster, whatever that is. And then we build those probability benchmarks, those KPIs, those metrics, so that we start to see that growth, that multiple expansion, because that interpretation drift is a leading indicator of EBITDA leakage. Jeff, I've said a lot there. I'm kind of curious how you're translating this and what you've seen in sales organizations, and is that being done, or how do you do that? You're on mute, by the way.
Sorry, my dog was barking, so I wanted to save everyone that. I think as it relates to the sales pipeline, I mean, confidence is not certainty, right? They may sound confident, sales reps or people trying to land these deals, but it doesn't mean that the business is actually aligned. I mean, they might say, hey, it's going to feel like I got a 70% confidence rating that this thing's going to close. But what is that based on? Right? Because I think one of the most important things is, that I would recommend for business owners is, if you don't already have the CRM where you're capturing this history of information, then that's a big opportunity, because salesperson might say it's 70% likelihood of close, and you start digging into why. You might ask 3 different people and they got 3 different answers as to why they think that's going to land. But history says anything in this bucket here has got a 25% chance of closing. That's what our record is. But yet you're saying it's 70%. So, which is it? right? And really being able to dig down on those, have a more accurate pipeline, right? And have your alignment with your sales reps to know, these are the reasonings why you give it a higher confidence rating. And it's not just, gut feel, right? There's many reasons for that, but, ultimately salespeople are pretty optimistic people. And they want to look good, but the CRM, you don't want it just to be filled with a bunch of baloney, right? That's not true, or it's not likely, because you're basing your forecast on it. You might be basing your entire budget, right, following year on it. So it's really important that regardless of what salespeople say, you're keeping track and record of all of these things, so that you've got your own data that says if it gets to this point, we got a 25% chance of closing. You're not worried that the salesperson thinks it's 90.
Yeah.
Right. You've got it. You've got the real numbers. But many companies are not tracking that information.
I see. I'd love to hear from a couple others. Vladimir, Dan, Clayton, anything that you all wish to add?
Ooh, I just jumped in, and I'm so sorry. I was trying to log in on my cell phone and it wouldn't let me. So I had to, while I'm driving, pull up the laptop. So I'm probably not the best person to drive and try to chime in.
Well, hey, but that's perfectly fine. I appreciate you saying that. I don't want you to be a statistic because you're watching my slides. So you get yourself to a safe place. If you feel like chiming in, I'd love to hear from you at the right time.
Yes, sir.
I'll jump in a little bit on this.
Please do.
The motivations of different people involved in the pipeline are completely different, right? The sales rep, sales training, sales culture in many companies, at least that I've been, have pushed, right? And so the sales rep is trying to keep up with the push, and that creates their entry into the pipeline. The head of CS looks at that pipeline and says, I don't have the people. Like if all this business closes, I don't have the people to manage it. And the CFO is taking the opposite view and asking for resources. And the CFO said, I don't believe a word of this. And so, boy, you have a jumble of different perspectives happening. So I've seen that way too many times.
So I think that sets us up just nicely for this next slide. And in preparation for this slide, I'm going to just go a little silent. I'd love to, I think I want you all to see this, kind of internalize it a bit. Jeff, I'd love to hear your thoughts when you see, once you've kind of collected them. This is the leader's perspective in blue, the team in gray.
Very close on that.
What do you all see?
Yeah, I mean, the general trends are kind of similar. Brand strength and market growth. They're similar. Same with financial health. I guess the biggest misalignment is quality assurance and process efficiency. So yeah. I don't know, for the leader, it's almost like this seems like a startup, like how a startup owner would be, because we got a great product and we got great strategy and we've got customer loyalty, maybe not, but branching, but no financial strength and no processes and quality assurance is low. I think in general, I don't know, there's not a huge misalignment here, but on a few items. So I don't know. It's interesting. I'd have to think about that a little bit more on.
So I'll
what this means.
I'll let a little bit of the cat out of the bag. This is an $18.3 million company, actual metrics. So I mean this. So I think your assessment there. This might be a startup. I think there might be some nugget of wisdom in that read there, right?
Yeah.
Sayer, Dan, Clayton, any thoughts as to what you're seeing, or kind of what narrative's going through your head now as you see this?
I have two thoughts. Just because they, they might have been a startup and now they might be getting past it, doesn't mean they have grown out of the startup conversation.
Yep.
And instead of people coming together and talking from their typical narrative based on their function and their role in the organization, it seems to me that having some sense making of what are we talking about so that we can have some shared definitions and some shared language. Otherwise, it's just kind of meeting with people and going through the motions year after year, talking about the same things from their own perspective while Rome is burning or, a lack of progress is happening.
Yeah. I like the language there. I mean, what I think I'm hearing as I read between the lines is you're saying there's a systemic issue here that's occurring, right? So what this leader, as you kind of pointed to, Jeff, is they're fiercely optimistic on a number of fronts, but they just see that the background processes are not so strong. It's kind of a little bit of what I'm seeing here.
Yep.
The rest of the team says, hey, I think some of these background processes are actually working okay. To me, and maybe this might be what you were saying as well, Sarah, is that there's a lot of heroics happening here by this leader. And my question might be, and I do know a little bit more about this company, but I wonder if this is what's actually holding them back, is that you've got this leader who's got this mercurial capability to run a company, but that's why they're stuck at 18.3 million. Jeff, what do you think?
Yeah, I mean, for me, if I'm a leader and I'm rating myself, and it would just be unacceptable. Honestly, I mean, to be that optimistic, but obviously he or she knows the financial situation and it ain't good.
Yeah.
So whatever he's doing is not working, right? He has no belief in the quality of what they're doing. I mean, there's some serious problems here, I think, with the way that the leader is viewing things. I mean,
well, and I don't necessarily want to point a finger at that leader, because we don't know if it's the leader of the team or not. I mean, that's why
true.
But I think the point that I wanted to try to emphasize is the systemic issue, and this is part of what I think, Sarah, that you are also kind of bringing out or teasing out, is what got them here today is not enough to get them through to tomorrow, right?
That, and the other systemic issue I would offer is everyone is speaking to whomever they need to please. So the CEO is speaking to investors, the street, whomever. Everyone is speaking to who they need to be heard by, which could totally miss the conversation about, are we committed to building what kind of company to get beyond a startup to be that at the next level is an entirely different mode of leadership, an entirely different conversation. And most organizations don't take time to reset their conversation.
Agreed. I want to go to the next slide here, because I think this is kind of where we're leading, right? We've just now visualized something that, for all intents and purposes, Sarah, to your point, is invisible, it's hidden, right? Mm-hmm. That decision risk between all of them, those conversations they're having with the different stakeholders external to the company and each one of the different roles, the gap between the reporting and the reality, right? Confident reporting internally, but weakening certain inside, because, hey, salespeople are talking to people on the outside saying, hey, they all love our product. Financial officer saying, yeah, but I'm not seeing it in the bank account. I don't know what you're talking about, right? Confidence stays intact, but the certainty drifts. That is decision risk, right? And that confidence is only useful if it reflects a shared understanding, to your point, Sarah. Is that agreeing with what you were saying there?
Absolutely.
Jeff, sales organizations, I mean, so critical. Everyone is focused on sales these days, bringing net new acquisitions, keeping existing customers happy. How does this slide resonate with you? I mean, nothing's really broken, but some of the numbers are on hold here. Just says that their reasoning behind them really doesn't match across the organization.
Correct. Yeah. So, probably one of the simplest things that I really enforce and then teach my clients, for particularly sales leaders, is you have a weekly, or however, depending on how many salespeople you have regular one-to-one meetings with each salesperson. And it's really to get more certainty on their pipeline, right? Because you cover the exact same agenda every week. There is not a great salesperson out there, first of all, that wants to show up to that meeting with nothing to say or a bunch of, inflated projections, because it's going to get questioned. This is the time that you coach and you work with your salespeople to look at things in a more realistic manner, to coach them, to help move things along. So if you're doing your job as a sales manager, you should see the BS, for instance, that's in each salesperson's pipeline. But if you're not having that conversation for weeks or months at a time, or you're doing it in a group setting where you're not really digging in with one person, you're gonna, you're still gonna get inflated or numbers that are not real, or stuff that's just made up. That's impacting your bottom line. So
yeah, I want to extend sort of what we're seeing here, right? We've started to take a look at what was hidden, sort of the operating assumptions for this individual. Now we've seen how it kind of looks versus the team, and sort of how that narrative drift, and kind of to what you were saying, a number of you have been saying is, gosh, that drift is actually starting, there's friction that's sitting there, right? It's hidden, it's beneath the surface. And Sarah, to your point, is a lot of companies just don't ever even address it. I want to talk about
They
that.
don't know. Exactly. They don't know how to address it. If they are not talking about what they need to do their job well, I have been in meetings where I can clearly see they don't know where. So if this isn't working, I have no idea what to do.
Right.
And it's also very difficult in some organizations to admit that we don't know what the answers are. We're not humble enough to admit that we're not perfect and we still need to work on this, whatever it might be. This is not just the gap. This is the missing conversation.
Yeah. So that leads up nicely here, right? Because we did this all through a diagnostic called the core diagnostic. And this is what happens, right? Is you start to put this together and you do it across the teams. I mean, I know we're talking about sales here, and then hopefully the numbers aren't too small here, but you can see that alignment amongst these different teams and these different departments. Sales has actually got a reasonably high score, but product has a low score in terms of their overall alignment, that strategy to execution integrity there, right? So while we can see this individual leader, we can see intra-team, imagine if we can now start to see intra-team, because now the sales team is seeing that there's some fracture in what's happening with product. And they're walking over the product team and starting to ask some questions that should be a codified process. And that is now all of a sudden leading to sales teams or members discounting, hedging, equivocating, changing how they have conversations with people. Jeff, have you ever seen that occur in organizations?
Oh yeah. One of the bigger problems, I think, is salespeople selling solutions that really the company is not prepared to execute on.
Mhm.
Right. Or selling something at a margin that, and a lot of that goes back to communication too, right? Like a salesperson needs to understand margins. As a matter of fact, if you can base their compensation and their commission on margins, it can be difficult to do, but that is even the best way to do it, because they're never going to sell stuff that's not profitable, or they're not going to get paid. Right.
That's right.
And so that's where a lot of the misalignment happens, particularly if you've got a complicated or customizable service or solution where everything is not standard. And I've definitely worked with some of those kind of clients where it's very tricky, right? You got to customize, water filtration system, right? There's a lot of moving parts to that, right? And you've got to work with obviously your engineers on your team to make sure that it's quoted accurately, because if you make a mistake, it's obviously a big mistake, right? Versus other things that are easier to sell or maybe less standard. The margins built in. There's not enough. Salespeople don't have a lot of ability to change things. That's you're not going to run into as much of that problem. But sometimes your product or service doesn't lead to that. It's not, like I said, it's complicated or it's customizable. So those are different situations.
I'd love to open it up to everyone else. Clayton, again, don't push you in any way, but I mean, if you have thoughts, Vlad, I know you're on the phone. If you feel like sharing something, Dan, being able to look at a map like this that kind of shows you where that alignment across the team, really how cohesive, how much integrity there's to that alignment and that translation between strategy and execution. What does that allow in terms of how you think about things and how confident you are or certain things are going to happen the way they're supposed to? Any thoughts there?
Yeah, and I'll happy to share about my process, which may be different from a lot of folks out there. So with the solution that we bring to the market, being human capital management, even in the first discovery call with whether it's director of HR or CFO, we always bring in an HR person and RSR, and just to understand and uncover what they got going on in their company and what's important to them, so that next time when you are actually having a demo, you have a sales engineer, and with the sales engineer, you're going over the notes a day prior to ensure when you are showing up on the demo call, you know exactly the pain points that you need to speak to and show the client what they're interested in the most. And obviously, without having a conversation with an engineer, you can promise a world, but not be able to deliver on those things. So for us, the process kind of eliminates that issue. And what I mean by that is having a conversation with an engineer prior, just to see if we can deliver.
Yeah.
So kind of avoids having to backtrack later down the road.
I appreciate that. I mean, people talk about expectations all the time, right? And this is the ability to set expectations internally so it can actually be delivered externally. I'm going to flip to another slide here because I want to kind of show you this white space is what is expected. That's what the spreadsheets will show, right? All the colored in spaces are really kind of that hidden drag, the hidden friction that's inherent in the system. In this case, there's a number in here. It's kind of buried in the middle here. It's a little smaller than actually I wanted it to show up. 17 to 33% of the value is at risk here. They're carrying, because of these hallway conversations, because of these, I don't know what to do, and I'm getting blocked because I don't know what to go do next or who to ask, or because of ego, right? Whatever the case may be, because there's not clarity in how to go forward here. There's potentially 17 to 33% more load being drug along this process. Jeff, how does this resonate with you sort of experientially? Have you felt this, like there's a boat anchor that the organization is kind of dragging along with them, but they just can't name, and it's hidden, invisible to them?
Yeah, I mean, as it relates to the sales pipeline, I mean, you're basing your forecast or budget, particularly after private equity, for instance, buys you, and you're held a lot more accountable to numbers. When I was leading my private business, it wasn't as important because I was only accountable to myself, right? And for many years we didn't even have a budget, but it's super important, obviously, during due diligence, when if you are trying to sell your business and you don't have a record of CRMs with history of close rates and things that are provable, then you're not going to maximize the value. Or if you're founder led and they're particularly vulnerable because everything's in the founder's head. Right. So it just depends on who you're answering to, but things get more serious as you get bigger. And if you have other people that are buying you, this right here is, a huge problem, and one that you'll have to have intentionality on fixing, because it just won't be accepted.
Yeah. I mean, and just think this diagnostic in just 3 minutes is roughly how long it takes to run the diagnostic. In 3 minutes, we're now starting to find the scope and the impact of this. Question for anybody else, Sayer, Dan, anybody else who would like to chime in. Can you all see how that actually is causally, how it's kind of linked to that EBITDA and revenue being knocked down a couple of pegs? Do you all see that connection there?
Without a doubt. And I'm wondering if this could not be solved, not totally solved for, but if progress couldn't be made, if there were different items tracked in your CRM that connected straight to EBITDA, that would narrow this gap a bit.
Oh, it's a fantastic question, and the reason why is because that answer, I believe, keeps morphing, right? I'm a collector of quotes, if you will. And someone told me once, different processes break at different rates. I mean, you start to get from 5 million to 10 million, 10 million to 18.3, whatever this company was. Those processes keep scaling at different rates, and they break at different rates. So what might be the KPIs and the metrics to lead to EBITDA in the first 2 or 3 years of that company are not the same ones that work from 3 to 4 and 4 to 5 and so on and so forth. Is that
Could I speak to KPIs for just a moment?
please?
You know, when the organization is evolving, just like you indicated, how many times have the KPIs changed? So frequently, it's just a box checking routine. How are you implementing the strategy this year? Well, I did this, I did this, I did this, which is the same darn KPIs they had last year. And if the KPI doesn't change along with a perception of what their roles and responsibilities are, you're not going to get anywhere.
This is I got a great story about this. I was working with it's an $8.4 billion company that 129 regional locations. I mean, they were that big that regional had 129 of them in the United States. I was working with one of those regional managers that had probably about 350, 400 people rolling up to them, and they felt like they were banging their head against the wall all the time. I said, what do you think is the problem? Well, we're following all our KPIs. I said, let me ask you a question. Where did those KPIs come from? Well, some of them are passed down from corporate, and that's what we did at our last company. Interesting. And why did you leave that last company? I just didn't like the culture there, and I don't ever felt like that company really understood how to take care of our technicians and our service members as they go out into the field. I said, and which KPIs are you using right now? I use the ones that we used in the past. That's what worked for us historically. I said, wait, let me get this straight. You brought those KPIs from a company that you left because it had this corporate feel, and it didn't actually solve the problem that you're having back then, but you brought them along here, kind of doing the same thing that didn't produce the results that you want, but doing them again. Sarah, almost exactly to the point. I don't think people inspect that stuff enough, right? What is the problem we're trying to solve? And are we actually putting numbers to measure our proof of solving ourselves out of that problem? Jeff?
Yeah, correct. Yeah, I mean, I think there's several problems with KPIs. I mean, first of all, do they even look at them?
Yeah. Throughout
the year, right? Yeah, we developed these, but yeah, we got to look at that, right? If you set goals, you need to measure yourself against those on a frequent basis, and that's, for instance, why you meet with your sales rep and you talk about close rates and conversion rates by source, average sales cycle by deal time, and what their win rate might be, and reasons for losing. And those are all important KPIs. But you also, as you're having those discussions, you realize, you know what, that KPI is not as important anymore. I think we need to add this one, right? Yeah. And I guess I would say too that if you're keeping records correctly and you have a great CRM, the KPIs will start defining themselves after a few years. Right, because you'll know what's important, and you'll have historical data.
That's right.
And then that's where you can start basing off your KPIs. Look, we had a 10% win rate last year. Last 3 years. Well, what do we got to do to get it to 11 or 12 or 13 or 14 or 15? Right. But I think a lot of times KPIs are great. Yeah, it's kind of like strategy. We'll create it, and then it's not measured against what gets measured gets managed, right? But you got to look at it, and you got to see how you're trending, and you got to pivot.
I think.
Can I build on that just with one quick comment? When we are so focused on measuring progress by results, we hardly ever pay attention to the behaviors that are driving that need to change to get different results.
Yeah.
That's right.
Yeah, I would agree with that. I mean, from a sales perspective, like you could have, first of all, I don't really care about many sales metrics other than one, and that's how many meetings did you get? That's it. If that's acceptable, that's great. If not, then I got to start going backwards. Okay, what's your activity? How many calls did you make? How many emails did you make?
Mm.
Well, you made 100 phone calls and sent 100 emails and got one meeting. Well, this guy made 20 calls and got 10. What does that tell you? Well, we got to look at what you're saying in those emails and what you're saying on those phone calls and what you're saying in those messages, right? We have to hone that because it's obviously not working, right? So I think without that information and without transparency into there, you have no idea why that rep is not getting meetings, and that one is.
And to maybe put a bow tie on that, I think what I'm hearing amongst all of you is this idea that KPIs are great, but those are static for solving a problem at that particular time. They have got to evolve to solve the new problem that we're looking at, because as that company continues to scale, it goes from 5 to 10 to 15 to 1800, whatever the case may be. Those KPIs move along with it. You fit that new narrative to create that alignment between strategy and execution. It's not static. I want to show you what that looks like, right? For this particular organization, I guess we've changed the name. We named them Contract Fabrications. What was reported is their closed confidence is 34% of their pipeline. Late stage deals reported high conviction. But because of the drift between all of them, actual close rate was not 34%, it was 13%. Coordination costs much higher. Forecast gaps, big delta here. Margin variance, pretty significant. So for this $18 million company, if you look at on an annualized basis, renewing contracts, redoing contracts, a big container here, right? Are you going to realize all of that? Probably not. But 6 million is 33% of that revenue is sitting in that container that's at risk because of that signal breakdown, because of that fracturing. Jeff, seeing this, how does this kind of sort of viscerally feel for you? I mean, you've talked to organizations before. There's what they're forecasting, what's actually happening. Back to what you're saying, how many meetings did you have? If not, I go backwards. How does this sit with you, being able to see this hidden risk here actually has got numbers to it?
No, it'd be disturbing. It'd definitely be disturbing. And I think that obviously you're looking to improve the actual close rate, so knowing that actual number is the first step. And don't use unrealistic numbers. Under promise, over deliver, right? And so when it came time to doing budgets, for instance, we took that into account. Yeah, we think we're going to generate, X amount % new sales, but I'm probably not going to use that number. I'm probably going to use something slightly more conservative.
Yeah.
But it's all a guess if you're not tracking it and you don't know. You don't know. And so you're guessing, but you shouldn't have to guess. Next year, and then the next year, and then the next year. You should be honing in, on what those numbers should be, so that this company's, I don't know how old they are, but they should have realized this, quite a while ago.
Yeah, the kind of the bow I'll put on this slide here, right? With this core insight, right? We're starting to see that interpretation drift is not a communication problem. It's an EBITDA problem, right? By the time these fractures appear in the profit and loss, and you see it on the dashboards, you see it in the pipeline reviews, value is already leaked out the door. It's gone. You've missed that opportunity, and that ends up being a potentially large number that's just kind of sitting there at risk all the time when you could create more certainty.
And Vinay, I was just going to say, from a meta level perspective, if you go upstream in psychology, they call it hidden commitments and hidden challenges. So everybody has that. And I heard the word behavior earlier. So it's not just behaviors, it's beliefs, habits, and perceptions. And so, if you're going to solve for that, then you got to really dig deep, and people have to be thinking about what they're thinking. That has to, all progress starts with telling the truth. So this is evidence that there's something broken. And if they're not fixing breakdowns and blind spots, then they're becoming them. So, but yeah, just from a really broad perspective, upstream is their hidden commitments and hidden challenges. And, you can solve those sometimes if people are willing to change, but if they're not, then you have to replace them. That's just
Tracy.
I got two or three more things I want to show you here, just as we kind of get toward the tail of this. I want to make this point of that you hear it before you see it, and what I mean by that is the dashboards, the pipeline reviews, the slide decks, presentations, they all look great. But what you're hearing is this sort of inconsistent language in the hallway that is, wait, hold on a second. Why is sales talking to product? Why is sales talking to the CFO or it's the financial team, right? By the time it shows up in the numbers, it's already been shaping for weeks or months, right? And the question that I think becomes is, can you trust the confidence of what is being spoken within the organization? And these, I'll say is three questions that I can think of internally that need to start being asked, Sarah, to some of what you've been saying all along, right? Do teams explain outcomes the same way? Are decisions harder to defend cleanly? Do teams point to the same signals? Because you're not looking really to measure that data. You're actually trying to see, does everybody trust the system? Do they have the same core understanding of what is happening in our organization? Jeff, how does that fit with you? What I just said there?
Yeah, I mean, there's a lot to unpack there. It's every organization's obviously different, but you have to, the leakage and the EBITDA leakage is going to show up in a lot of different ways. As a leader, you're looking at missed forecasts and overhiring and being understaffed and margin compression and rework. Those are all things that are going to be popping up when you can tell you have a misalignment. And as a leader, it's your job to make sure that you're all rowing the boat the same way. So whether it's discussions in the hallways or, why did we overhire 10 people or why are we short 5 people? Those are all signs that you have an EBITDA drift problem for sure.
Yeah. So I want to kind of bring this just to give us a little bit of time to, kind of reflect a little bit. We've kind of gone in this journey. We saw an individual, kind of what their perceptions of the team were. We saw what the team's perceptions were differently in operating and how they make decisions. Seeing those invisible factors, we saw the significant impact that could have on the organization and how that is a causal, a linkage to where the EBITDA is. So whether you're a coach, advisor who works with teams, there's a way to visualize that now. It's this core diagnostic. There's a link here. There's a QR code where you can scan it and get that interpretation or explanation drift. So you can actually see what is happening. And it should take about 3 to 4 minutes to do that for each member of a team. Jeff, you've used this before, sort of experientially. Being able to visualize this and show this to a team, would that help you in terms of how you have conversation with teams kind of coming in the door?
Absolutely.
Leadership.
Yeah, I mean, I look at this a lot like a personality profile on someone. Man, you could work with someone for a year, 2 years, and just figure out who they are, or they could take a personality assessment and in 10 minutes, at least some general indication of who they are.
Yeah.
And it's the same way. This is basically the same. It's a personality profile for a company.
Yeah. That's right.
How are they wired? Where are they breaking? Where are their blind spots? Where are their strengths? And you can find out instantly.
Yeah. I'll use some language here, as opposed to sort of the psychology of the individual. We're talking about sort of the sociology of team, quantifying the culture in a way that's not squishy, right? We're talking about here are the actual quantifiable effects of what the prevailing sociology of that team is and how the interaction, not only between members of that team, but sort of with other teams. Sayer, Dan, others, I would love to hear kind of what you see is now possible if you are able to quantify that for a team.
Well, you can certainly refocus a conversation more quickly and get more people on board to see where the problems lie.
Yeah, for sure. So if you're a coach or consultant, I'd love to have a conversation with you, because we're just simply the instrumentation panel, just the platform, just the tool that creates the diagnostic and these visuals and the KPIs that show how to build that alignment. If you're running a sales team or an organization, it's a free tool to show you where that conversation drift is already happening. It takes about 3 minutes. Dan, you're constantly thinking about meta level reasoning and kind of where people are stepping out. What is this? What space does this open up? Being able to see this.
Well, the thing that I'm focusing on is decision risk. So you need to have better decision architecture. And so if we look at Leonardo da Vinci, Bill Gates, Richard Branson, these people think about what they're thinking. So these companies clearly are not thinking about what they're thinking. So metacognitive mapping, if you haven't heard about it, I mean, it's just basically mapping out your thoughts. So, I mean, if you just took that approach, then you could have better decision architecture, and then you'd be more proactive and you wouldn't run into these problems. That's my take on it.
Yeah, for sure. Any other thoughts or questions, reflections in terms of kind of this journey, what's now possible, what you saw that you didn't see before? John Lane, got any ideas, thoughts?
Yeah, I love watching this. I love watching you explain it.
Yeah. Well, feel free to grab that code, take the link. I can put it into the comments in a second here. Just so and I'll email it out to them. It is a free process, and be happy to show you what you can now do with that. Thank you for the time, everyone. Jeff, I appreciate you spending a lot of time sharing some insights and some of your.
Can I help you?
I'm sorry, Clayton.
Hey, Clinton.
Clayton, did you have a question?
Yeah, I think he might have been taking a call. But I appreciate you having me. Enjoyed it, and appreciate the conversation. It was nice. Good conversation.
Thanks, you all.
Sarah, Dan, Vlad, appreciate you all joining the conversation as well. And first and foremost, well, thanks for helping put this whole thing together so that we have this whole event together. So thank you all. Thanks, everyone.
Yep.
Thank you.
Thank you.
Thank you very
Have a
much.
good day.
Take care.
Bye-bye.